Coke is a very complicated business. It looks simple, but it's actually very complicated. So there is a talk Charlie Munger gave on Coke. Have you read that talk? Okay.
It's worth reading.
Yeah. So basically, the way to think about Coke is percentage market share of the fluids consumed by humans globally every day, right? So we need 64 ounces or something per day to stay alive. And some portion of that needs to be flavored so that we don't get bored. Yeah. So if you gave Alex only water, that would not last more than 2 days. So some portion needs to be flavored. And then the thing is that there's a distribution engine that Coke has, which gets that flavored thing to several billion humans at a cost that almost no other company can do. So it's not, when we think of Coke, you immediately go to sugar and those sorts of things, but it's really a flavored water delivery mechanism. And flavored water delivery mechanism doesn't need to be unhealthy, right? It can be anything. Their pipe, the Coke pipe, you can pump anything through that pipe. Rebuilding that pipe by somebody else is very hard and very expensive and unlikely to happen. And what Coke can do is they just can look around and say, oh, Gatorade looks good. Let's just buy Gatorade and send it through the pipe, for example, right? They don't need to actually come up with the stuff that needs to go through the pipe. But the point is, I would say that's why I said that a business like Coke to me is more resilient than a business like Microsoft for that reason, because of that pipe and because unless humans stop needing that amount of liquid, that equation stays, right? And so even though you've got other players, but there's only like 2-3 players in the world that have enough bandwidth on that pipe and enough kind of cost advantage on that pipe. So the way I look at it with Warren and Charlie is that, in the mid 80s, late 80s, they cracked fundamentals of what Coke was. And of course, they had a huge run up. They made a lot of money in the next 10 years, 12 years on Coke. And they didn't make so much money for a while, but now it's again, you only need to get rich once. Basically, if you have something like that in your portfolio, don't try to optimize. Just, there's a podcast called the Founders Podcast. I don't know if you guys listen to it. I tend to overdose on it. I think I've listened to more than 100 episodes so far, but he keeps putting out more. I was listening to the one on, what's that woman's name? Harriet Green. I think that's her name, Harriet Green. Her father was very successful and wealthy. He didn't want a daughter. He wanted a son. He wanted to transfer business acumen to a son. But, Harriet lived maybe more than 100 years ago. But anyway, he ended up with Harriet being his only heir. So he was forced to teach her business. And he was forced to basically explain to her how to do well, etc. But when he passed away, and she was really pissed off when he passed away, even though she was super, super smart and ended up being 10x better than the father ever was, in his will, he said he gave the entire family fortune to her, but he put it in a trust. And he made the trustees a few men, not her, who would control how the trust was invested. And all Harriet was getting was the income from the trust. So if he left her 10 million, she was getting $500,000 or something, 600,000 a year, right? From that stream of the little bit of money coming out, she blew past the principal by a huge factor, really went way beyond. So basically, the idea is that you can have Coke and you can think like Harriet. And, for Alex's benefit, we can give him the dividend of Coke to go have fun with. How's that? Then we can do it like Harriet, He can go all out on the dividend, leave the principal. And that can work too, because Harriet proved it can be done,